Hey traders, welcome to Charts and Coffee. Wednesday, everybody. Happy Wednesday. Glad everyone can be here to, you bet, caffeinate and dominate. This morning, we're looking at a morning that is just digesting the ADP, which is not necessarily a really important release, but it is one that starts this countdown, the psychological countdown to non-farm payroll, which is absolutely an important release coming up. Ultimately, what we do want to keep an eye on is how does the jobs picture that we'll get the completion of on Friday, 8:30, how does the jobs picture then map back to what it is that we collectively are expecting from the Federal Reserve in terms of pause for the remainder of 2023, or even though it's not the probable outcome, it is a possibility. It's the second most likely on the Fed Fund Futures target rate probabilities, and that is, do we get another quarter point hike? So if the jobs number is stronger than expected, there's a little bit of an expectation that, hey, the Federal Reserve still has a path to another hike, meaning they're not breaking the economy, right? And they're not stifling jobs growth, so why not? Right. Now that's kind of the way that information is processed. So we're going to keep an eye on that. Yesterday, if you caught the free video that I did and you're wondering, okay, Rog, how is it that August tends to react? Let me take you on over to the Simpler Trading page. And if you head on over there, under videos, you will see August seasonal and trends. Gang, this is where I'm using data. I'm going back 5 years, 10 years to walk everyone through what it is that we could expect in terms of behavior in August. If we go back the last 5 or 10 years, it is most definitely choppy, but there's a little bit of a slight bullish possibility for August, and I would stick with the bullish possibility, mainly because we are still in an environment where we're in a pause expectation from the Federal Reserve. So I would still look at that as the most likely. And you'll see I use a lot of data for this, right? No speculation. We're looking at what the Federal Reserve is doing and saying. We look at the data. And this is a good look at kind of the typical behavior over the past 5 years for the SPY during the month of August. So definitely choppy, right? But likely could be ugly, but bullish, right? I'm not looking for some major pullback. And by the way, why aren't we? Why am I not a naysayer? Why am I not looking for a bunch of downside? It's really pretty simple. And we're going to be talking a lot about this during the webinar today. So if you haven't already registered, gang, I do not want you to miss it. It's coming up tonight at 8 p.m. Eastern, New York time. If you register, let's say you can't attend it live, we'll send you out the replay. And a lot of folks just choose to watch the replay, and I get it. It's prime time. But if you're looking at how we are tackling this market, not the market from 3 months ago or 6 months ago or a year ago, what is happening in this market? What's been happening since we've been in summer? How do we handle July? And what am I going to be doing going into August? How am I looking at relative outperformance? How am I looking at index sector stock? And then what are the tools that I'm using to do it, right? And a lot of traders, and look, if nothing else, a lot of traders have asked me, Rog, I've been wanting to kick the tires on the DPMRs, the daily price movement ranges, or the HPMRs, the hourly price movement ranges. I'm going to show you all how you can check them out for 30 days, the premium subscription. So come check it out, 8 p.m. tonight. All right, now, part and parcel with that conversation is the fact that when we look at the high concentration weighted sectors, right? The whole idea behind the high concentration weighted sectors is this. If XLF, XLK, and XLV can maintain, for the most part, an uptrend, it is virtually impossible for the S&P and the Dow to have a sustained move to the downside, because this is if you pop the hood on the indices, what you're going to find underneath the hood are sectors and individual stocks, and sectors are the first place we'll start after going to index. And then when it comes to the NASDAQ, we want to take a look at XLK. We want to look at XLC. We want to look at XLY, right? We want to take a look at ultimately what it is the overall trends have been in terms of tech, consumer discretionary, and communication. Now, if tech, consumer discretionary, and communication continue to head higher, that reflects Apple, Microsoft, Meta, Google, Tesla, Amazon, Nvidia, right? So this is the way we sort of encapsulate what's happening rather than going off and looking at meme stocks, which tend to have little to no impact on the broader averages, right? So if you look at the market in this connected way, which is a lot of what I'm going to talk about as well tonight, it makes a whole lot more sense as to the direction that we're trading things. And more importantly, gang, what we're trading. What is the reason behind, for example, choosing Johnson and Johnson for one of our monster trades in July, or JP Morgan? Why do we end up here, right? Or Freeport McMoran? And I'll tell you this, it's not because it was spit out by a scanner giving me 400 different results, right? That's not helpful. This is a process by which we can take a lot of ideas and narrow it down to just a handful, right? Not the other way around. So it's pretty exciting what happens when I see the light bulb go on with traders saying, oh, so this is how you put index sector stock to work. And that's exactly where we are right now, gang. While we're talking a bit about Freeport McMoran, let's take a look at the FCX, right? Let's take a look at the FCX. So XME is the metals and mining. Metals and mining turned into an uptrend in July, as did a lot of very interesting sectors. Once we have the uptrend, we can crack that open. And one of the results was to take advantage of the strength in Freeport McMoran. And we're going to continue to look for opportunity. So even though it's pulling back, we're going to start to look for opportunity again, because one of the things I'll walk you all through is this Freeport McMoran example. What got us in, what was the trigger, what were the indicators? But suffice to say, this was back here in the 21st. And if I can get another setup that takes me down into the daily price movement range, you can see this gray area right in here. If I can get another setup that gets me down in that area, absolutely. As long as index sector stock is in play, we will absolutely look for that opportunity here. Okay. So that's really, again, rinse and repeat, right? Okay. So we want to take advantage of that opportunity again, because just because it's moving lower doesn't mean the trend is gone. In fact, if you take a look, right? If you take a look, we're down at about 42 and change. So we're going to wake up to some interesting action in Freeport McMoran. It's time to start looking to get long again. So that's the kind of thing, to me, that makes it really easy to find zones with confidence, because I'm looking at relative outperformers. And we're going to talk a bit about that for sure. All right, so moving on. So if you haven't registered already, simplertrading.com/opportunity, 8 p.m. tonight. So Finn West is asking, can I give you a summary of your webinar today for me? Finn West, this is what I would recommend. It's a 20-minute show. So the bottom line is this. We've got a trial package coming up. I'm going to walk you through the kind of trades, tools, and setups that I'm using. I never waste your time in a webinar. This is not just going to be pitch, which I can appreciate, right? Which I can appreciate. But if you like what happens in Charts and Coffee, the webinar is really an elongated version of that. And yes, I will be inviting you all to a $7 1-month trial with an absurd amount of indicators and access for the month. So check it out if you'd like. It's exactly what we're doing in the mastery. I'm going to show you what we're doing and how we're doing it in terms of the indicators and this relative outperformance watch list approach, which, if nothing else, will absolutely be a needle mover for you when you go into your trading session on Thursday. All right. So next up, what's the difference between ADP, the ADP report this morning, and the non-farm on Friday? FOMO, I mean, one matters, one doesn't. Is that a fair assessment? ADP really is not a report that a lot of traders presume is necessarily going to indicate what we'll get on Friday, right? So that's So that's really where I would say, uh, here we go. Not a whole lot of reaction. And why would I say that? If you look at the 5-minute chart at 8:15, I mean, I don't think we're getting a lot of direction from it. Although some folks might say, Rog, it seems like we're maybe moving lower after that ADP number. Yeah, perhaps. The main difference is that data point is a private number, right? Let's look at it from a objective perspective. It's a private number, right? This is from automatic data processing, ADP, and then on Friday we'll get the BLS, the Bureau of Labor Statistics, release on average hourly earnings, the unemployment rate, and of course non-farm. So it's a more complete. It's a huge data dump. There's a lot of information. We just focus on those main three headline numbers. But the main thing is Friday's a market mover. Today, not really, but it definitely gets us in the countdown to the jobs number. And some traders might look at the number and say, hey, what does this do in terms of perhaps foreshadowing? And let me bring up Forex Factory here. What does this do in terms of perhaps foreshadowing Friday, right? And I don't think a lot of traders do that either, to be quite frank. But look at the number. Why is the market selling off after 8:15 ADP? This is probably, if anyone's going to look at ADP and take it and map it to Friday, they're going to look for a bigger number than what's expected, because the expectation for ADP was 191,000 and we got 324,000. Now, mind you, the previous number was 455,000. It was revised downward. So see this red 455? ADP was off by approximately, as you can see there, 42,000 in the previous. So it's off by 42. It was off by about 10% last time. So what happens if this one's off by 10% too? It's still a big number. So then you roll on down to Friday and say, okay, could non-farm come in bigger than 203? And if that is a better than expected number, exactly, good news is bad news to equities. And that might be a little bit of what we're seeing from 8:15 to now. A big number is bearish to indices, is bearish to stocks. Why? Because it's slightly hawkish. It's slightly hawkish. And we'll take a look at those macro gauges at the open, and we'll see where, if really at 9:30 we're seeing the Fed fund futures slightly raising expectations for a rate hike in maybe November or December. All right. So that's the way I break that down, FOMO. Matt asked, last night Fitch made some waves by downgrading U.S. credit rating and futures flushed. You know, it's interesting. I saw that last night too. I saw that on the indices. Yeah, Matt. And I saw that on the currencies and treasuries as well. So let two things about any move that happens the way that move happened yesterday. First of all, I take it with a grain of sand, as it said, because of the time of day. The Asian session is relative to the U.S. or the European session. It's far less participated in, right? It's not a hugely participated in time of day. The turnover, the volume, etc., is far less. But you can see that. I'm trying to get down. There we go. Here, that's the move. You can see it here at about. You can see 1655. So that's the move we're seeing right there. And then it bounced a little bit. It faded. And then as we went into the Asian session, it sold off. It sold off some more in the European session. And then as we're coming back into the US, it's coming back up again. So it did move, right? But here's what I would say. And this is very much in line with the process that I was talking the other day about when someone asked about whether or not the Bank of Japan and their slight tweak to the way they're handling the JGB purchases was really a needle mover. And so the news might be interesting. The news might create volatility, but it's going to be the same litmus test. Did it carry price anywhere new? You know, in the wake of that news, are we seeing that the S&P on the daily, step back, forest for the trees, right? Are we seeing the market go anywhere new? The near-term low that was put in on July 27, as you can see here, was 45 53 and 3/4. Are we accelerating down through that level? We put in a low at 42, 52 and a quarter. So we barely, and I mean barely, took out that low that's been holding as a pretty decent floor. So it wasn't like we had a meaningful thrashing of this low on the 27th. Where are my drawing tools? All right, here we go. It's not like we had a meaningful thrashing of this low here, not at all, right? And then we're obviously back above it. So the bottom line is we're not seeing follow through anywhere new. Intraday, are we weak? Yeah, that's the great thing about day trading. We can have uptrends in the morning, downtrends in the afternoon, downtrends in the morning, uptrends in the afternoon, right? That's the wonderful part of day trading. Opinions can change, in these 5-minute interval populated charts. As far as a daily goes, it's a lot more steady, right? So I don't look at this as anything necessarily all that important until or unless we take out that low. And in the meanwhile, I'll just day trade the volatility on the 5-minute time frame. So that's the way you mentioned, how do we, digest it? That's the way I'll digest it. I've got a line in the sand, in this case, the low of the 27th. What is a line in the sand? It's just a psychological marker. It's a level at which we say hearts and minds and positions are changing. It could be the previous session close. It could be a significant high low for the range, right? But is there a psychological rating? So no, right now, Matt, Robert, no. I think it's a lot of noise for now. And until or unless that price level is broken, I'm not going to get caught up in the headline, because headlines without market structure, headlines without price levels are going to sway us. Oh my gosh, we need to sell if there's a sell setup, right? And we don't know that on the morning, we may not see some other narrative eclipse the Fitch news, right? The Fitch news. So that's the way I would look at that. And that's the way I would approach what's happening with that news. And again, remember when it was released, it is important to note that after the move lower, Asia sold off, Europe sold off. Now it's the US's turn. So let's see where we sit at 10 o'clock before we presume that this is, going to really be a big problem. Now, we also have earnings, right? And there are some shiny spots in the market right now. Here's AMD. It's going to open up just above 120 and a half this morning. Is it going to be faded? Don't know. But right now, it's opening up really strongly. I would have liked to have thought that Intel would have benefited from that AMD news, like we see UPS and FedEx sometimes move sympathetically, but we're not seeing it. The other thing I'm going to ask myself is, are we seeing a move into defensives, right? Are we seeing moves into XLP or XLU? Is the market sort of taking cover in what could be a choppy or even sort of wayward August, which is historically very common? Again, that's that video that I cut last night. So that's something else that I'm looking at as well. So again, the actual headline, I'm less interested in. What's the reaction, right? What kind of movement are we seeing in the wake of it? And here's the real question. Is it taking price anywhere new? Okay. Raphael asks, I have the Thinkorswim platform. Is that okay for the August trial? Yes, absolutely. Thinkorswim, TradingView. Those are two platforms. So that way, for those of you that are with Toss, great. You can use that. That is by far the most popular platform here at Simpler. The broker agnostic one, let's say you're trading with a completely different broker and you need charts that aren't reliant on having a brokerage account with a specific broker. That's why I use TradingView. So I've got this great broker agnostic, web friendly, Mac friendly, iPhone friendly second service that I love to support in the mastery. So either one, Toss or TradingView, and you are absolutely fine. All right. So I hope that helps. Do you need multiple monitors? You don't. Sue, there's a number of things that we're doing for our less monitor reliant folks out there, or if you're on a laptop or maybe two, and that's using things like tools we give you all, like a multi-chart layout and a watch list. So how can we give you more information in a smaller amount of real estate, right? Not everyone needs to be sitting in front of 9 monitors like I do. Absolutely not. So no, you don't need multiple monitors. There are things we can give you all, different layouts and tools like this that will help. Okay. All right. So gang, We'll talk a lot more about TradingView and Toss. That's going to be inside the trial. Gang, the trial is $7. I was talking to my partner here in the office. A lot of you know, we call her the Trish boss. I said, Trish, how do I get across to folks that for $7, you have full access to HPMRs, DPMRs, the room, the alerts, the layouts, the newsletter. Oh my gosh, for 30 days, right? That's really it. So if you want to see how we're trading and make sure it resonates with you, how do we use a scalable, affordable approach that is friendly to nearly any kind of account size, small to Godzilla sized, right? We're going to talk about that. I'm going to show you examples, winners and losers from July. How do we manage risk? How do we position size so that we can take advantage of the kind of moves that I'm anticipating going into August, into fall, and beyond? All right, gang, that's a wrap. Thank you, as always, for being with me here for Charts and Coffee. Caffeinate and dominate, gang, but be patient. It is August. It's a great time to really review your position size and your risk management, your watch list building, all the things we're going to talk about tonight. Be good to each other, gang.